Yeah, it's Brian Newman with the Showcase series, and we're introducing our next guest speaker, Wayne Morris with USA Brokers. Hi, Wayne. How are you?
Great. How are you? Good afternoon,
Good.
everyone. I need to share my screen, so let me do that. Can you see that?
Yeah, very clear.
Okay. Okay. So, I primarily focus on health insurance, life insurance, but my my mission is really to help protect people from any serious problems. So here's the problem. Skyrocketing healthcare costs, inflation, medical bills are the number one cause of bankruptcy in the US. 73% of all hospital and ER bills are due to accidents or critical illness. Over 60% of bankruptcy filers had health insurance. Emergency room visits will cost ten to $50,000 in the first hour or two. I had a woman that went to the emergency room with a broken finger. All they did was splint it, and it was $9,000. Cancer treatment can run 150,000 to over $1 million a year, plus lost income. Heart attack surgery, 75 to $200,000. Long-term care currently runs over $90,000 a year. Home health care over $45,000 a year. The average couple have to set aside, on average, $300,000 for medical expenses in retirement. And 60% of Americans do not have more than $500 in emergency funds. 7 in 10 people wouldn't be able to make it a month without a paycheck. In addition to that, we have a variety of budget changes that look like they're going to be passed. The ACA Advanced Premium Tax Credit for Obamacare plans expires on December 31st for individuals and families that earn over 400% of the federal poverty level. Millions of Americans will face higher premiums if that legislation is not reauthorized. There's proposed $880 billion in cuts to Medicare, Medicaid, CHIP, SNAP, and VA benefits, and $1.5 trillion in cuts to Social Security. So here's one of my favorite slides. What would you do in case of serious illness? So here are the top 5 strategies in my mind to mitigate your financial risk. Option 1, an accident and critical illness supplement. It's a supplement to your health insurance coverage, can provide $2,500 to $10,000 in case of accidents to mitigate your financial risk, offset your deductible and hospital expenses. $5,000 to $50,000 in critical illness benefits, again, to offset your deductible. Premiums start at $20 to $30 a month. Option 2 is disability income protection. Disability coverage will cover up to 60% of your income for 1, 3, 5 years or longer in case of disability. Option 3, this is one of my favorite products. It's called Living Benefit Term Life Insurance, and it really is, in my mind, a financial umbrella. You can get term life, which can last 10 to 30 years, $50,000 to $10 million in benefits, guaranteed level premiums for the duration of the policy, and accelerated living benefit riders at no additional cost. So these plans typically aren't any more expensive than a life insurance policy that only pays a death benefit. It can accelerate up to 90% of the face value depending on severity of illness in case of chronic illness, cognitive impairment, disability, critical illnesses, cancer, heart attack, stroke, organ transplant, or terminal illness. The tax-free funds, so the insurance carrier will offer you let's say we'll offer you 70% of the face value. It reduces the death benefit, but those tax-free funds can be used for medical bills, mortgage payments, household expenses, long-term care, replacing lost income, college funding, travel, or any other purpose. Those are a few of the insurance carriers that offer those plans. Here are some sample rates for a 30-year-old, $250,000 policy. For a female is $18, for a male, $21, if they're approved at preferred non-tobacco rate. A 40-year-old, $25 to $30, again, for a $250,000 policy. A 40-year-old, I can't see it because this is in the way. $52 for a female. So that's one of my favorite products. It's also available in a permanent life policy, Indexed Universal Life. It has the same accelerated living benefit riders, chronic illness, disability, critical illness, terminal illness. The permanent policies can provide death benefit protection to age 120. If it's an indexed universal life, you can either have your choice or combination of a fixed index rate, fixed interest rate, or it can be indexed to the stock market, like the S&P 500, NASDAQ, Euro stocks, etc. So depending on the growth of the market, it will give you a percentage of the gain, typically up to 10 or 14%. Those plans have zero downside market risk. There's an annual market index reset that resets the value every year. It provides cash value, flexible premiums, policy loans, optional long-term care riders, and if it's designed right, it can provide tax-free income for life and retirement. Here are some videos that I have on my website. There are also some books available that talk about living benefit, life insurance, the No One Ever Told Me, Your Guide to Living Benefits, tax-free retirement, the retirement miracle. So the top 12 insurance benefit, life insurance benefits are accelerated benefits in case of illness, child or dependent care, college funding, death benefit, disability income, final expenses, legacy estate, long-term care, major medical expenses, mortgage protection, policy loans, and tax-free retirement income. The final option is lifetime income annuities. They provide a fixed or indexed rate based on stock market growth. Again, zero downside risk, annual market reset, guaranteed lifetime income benefit riders, long-term care riders, tax-free income for life and retirement, a great alternative to 401ks, CDs, mutual funds, and the stock market, especially because we don't know what's going to happen with future tax rates. So you can eliminate the tax time bomb that's going to occur on any 401ks, 403bs, or IRAs. And so it can supplement Social Security income. Again, some books available on that subject. This is an example, it's an old example of what annual reset means. And this is true on indexed annuities and indexed universal life policies. So this policy starts off with a $100,000 value. It increases in 2 years to 136,000. So the stock market goes up. The stock market then goes down. Let's say it goes down 30%. You don't lose that money when the stock market decreases, and your funds start again due to annual reset. They start increasing again when the stock market increases. So you don't have to recover from any stock market losses. This is a copy of the front page of my website. So we represent over 50 carriers for annuities, critical illness, dental, disability, final expense, health, life, long-term care, Medicare, tax-free retirement, and several other products. This is my website where you can go online and you can pull quotes for term life insurance, return of premium coverage, permanent insurance, supplemental retirement income, whole life policies, annuities, final expenses, and long-term care. So what's in your future? Critical illness, chronic illness, disability, long-term care, retirement, terminal illness, death, or final expenses. Don't gamble, we can cover it all. So please contact me if you have any questions, and I'll be happy to answer any right now if you'd like.